Hello, and thank you for joining me today. My name is Shaun Floresca, and I'm one of the financial consultants at Alliant Retirement and Investment Services here at Alliant Credit Union. Today, we're going to discuss a subject that a lot of people just don't want to deal with: long-term care. However, it's an important part of the retirement years, and the earlier you incorporate it into your financial plan, the better off you can be. Long-term care can be an expensive drain on family resources. People might be surprised by the number of Americans who may need long-term care if current trends remain in place. It makes sound financial sense to develop a strategy to protect yourself and your family should the need for long-term care arise. Our team at Alliant Retirement and Investment Services is focused on helping you understand the ins and outs of investing, saving for retirement, and much more. So please take a look at our website, ARIS.AlliantCreditUnion.com, to see our list of weekly webinars, our podcast, which is called Invest Savvy, our blog, as well as other financial resources. Many members of the baby boom generation are now reaching retirement age. In fact, approximately 10,000 baby boomers turn 65 every day, a trend which is expected to continue until 2030. That works out to about one person every 10 seconds. How fast is that? As of 2020, 17% of the population was age 65 or older. By 2060, that percentage will rise to 23%. The life expectancy of the US population is expected to grow from age 79 as of 2017 to age 85 by 2060. The aging of America is accompanied by certain challenges. For example, an increasing number of people are expected to reach an age where they are likely to need some type of assistance. The U.S. Department of Health and Human Services reports that at least 70% of people turning 65 are expected to need long-term care services at some point in their lives. Now, while it's difficult to predict what type of care any one person might need or how long they will need it, statistics reveal that the average person needing long-term care will need it for about 3 years. Women are averaging longer at 3.7 years to men's 2.2 years. And 20% of us will need care for more than 5 years. Since so many people over age 65 are expected to eventually need some level of long-term care, it makes sense to have a better understanding of long-term care and how it works, and to consider what you can do to prepare financially. And to do so, we need to examine three key questions. First, what is long-term care? Second, how much does it cost? And third, what are your long-term care funding choices? Now, what is long-term care? Long-term care includes skilled nursing care, such as the rehabilitative care needed after an extended hospital stay. But that's just one of the many types of care available. Long-term care also includes assisted living facilities. These are environments for individuals who can no longer function independently but don't need daily care. These facilities offer occasional help with what are referred to as activities of daily living. These include help bathing, dressing, eating, transferring, which is getting in and out of bed or a wheelchair, and walking. It also can include home health care, that is, occasional help with the activities of daily living we just listed, as well as help with meals, budgeting, house cleaning, medication management, and even transportation. In this case, however, the help is offered by hired assistants who come to your home on a regular basis. Long-term care even includes respite care, an occasional break for family members who provide long-term care services. Next question, how much does care cost? The costs vary by state and region. The national average for assisted living centers, single occupancy, is $54,000 a year. The average cost of a skilled care facility, again, single occupancy in a nursing home, is much higher at $108,405 a year. The price can range widely from there. Some areas, like Utah and Missouri, for example, are somewhat lower than the national average for long-term care costs, while others, like New York or California, are quite a bit higher. What are your choices for long-term care? There are many. However, you have two primary choices: self-insure or purchase long-term care insurance. Let's go through each. Self-insuring involves depending on personal savings and investments to fund any long-term care needs. This would give you complete flexibility, but requires that you be prepared for the potential expense. Remember, the national average for assisted living centers is $54,000 a year, and the average cost of a skilled care facility is $108,405 a year. In fact, self-insuring is a choice many make by default simply because they haven't planned for the long-term care expenses at all. Self-insuring may have an impact on your overall retirement strategy. This chart shows a $1 million retirement portfolio generating a hypothetical 5% rate of return. It assumes a 65-year-old couple will be withdrawing $50,000 per year, adjusted upward by 3% each year to account for inflation. If all goes planned, their retirement portfolio has the potential to provide income until the couple reaches age 88. If, however, one spouse spends the first 5 years of their retirement in a nursing home, the portfolio's income potential changes. The hypothetical example assumes the couple will spend $117,000 a year, adjusted upward 3% each year for inflation, for the 5 years during which the spouse requires long-term care. As you can see, if they make no changes, their funds will be exhausted by the time they reach age 80. One question that naturally arises is, what about Medicare? Medicare offers only a partial solution to the long-term care problem. Medicare actually does cover some skilled nursing home care under very tight restrictions. For example, you must have stayed in a hospital for 3 days first. However, Medicare does not pay for custodial care. Under these conditions, Medicare will cover the first 20 days completely. For the next 80 days, it will cover all but a deductible. And after 100 days, it doesn't cover anything. This assumes, of course, that you find a skilled nursing facility that accepts Medicare and that you meet the other conditions Medicare imposes. Your other choice is to transfer the financial risk of long-term care to an insurance company through long-term care insurance. A long-term care policy can cover all levels of care, from skilled care to custodial care to in-home assistance. Many find it to be an appropriate way to protect themselves and their loved ones from the potentially devastating cost of long-term care. There are a number of pros and cons of long-term care policies. On the pro side of the ledger, a long-term care insurance policy can protect your assets. You won't need to dip into your retirement funds to cover the cost of care, and under certain conditions, your premium may be partially or completely deductible. Long-term care insurance offers other advantages. In the event of a long-term illness, it will enable you to preserve your dignity. You can maintain your standard of living and, for as long as possible, your independence. You can preserve your choice, and you can keep from becoming a burden to your family. On the con side, you need to be sure you are comfortable with the cost of premiums. It wouldn't make any sense to pay premiums for a number of years only to let the policy lapse because the premiums push your budget too far. Long-term care insurance also can be very complex. Policies offer a wide range of benefits for which they charge a wide range of premiums. It's critical to take a close look before committing to a policy or to work with a professional who understands what to look for. When choosing a long-term care policy, what do you need to bear in mind? First, make sure you understand the limitations and features of the policy you're considering. In most cases, policyholders cannot collect benefits until their disability reaches certain levels. And most policies specify how much they will pay for each day of care and for how long. Second, take a close look at the type of care covered. Long-term care policies can cover everything from skilled care in a nursing home to periodic custodial care in your home. You need to understand exactly what is covered and what is not. Third, look at the total benefit. You don't want a policy that will run out of benefit just when you need it most. And you don't want to pay for coverage you're unlikely to need. Look at the waiting period before benefits are scheduled to begin. You want a policy that's renewable. Consider inflation protection. The cost of healthcare has been rising more rapidly than the general rate of inflation. It won't help to have a policy that falls behind rising healthcare costs. And finally, consider a policy with waiver of premium. This means your premiums are discontinued once you start drawing benefits. There are a number of strategies you can use to attempt to accumulate the resources necessary to fund your retirement. And that's where we come in. We specialize in helping people just like you set up retirement strategies that help them pursue their financial and retirement objectives. If you're ready to take a fresh look at your retirement investment portfolio, please take advantage of our complimentary consultation and schedule a review today. Once again, here are our resources to help you create your financial plan. Please take a look at our website, ARIS.AlliantCreditUnion.com. I truly appreciate your attention and preparation and hope that you'll take advantage of the information and resources we've provided today.